Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant here, host of the Smart Property Investment Show. Hope you're well. Today, we're going to get into something a bit of an alternative to refinancing. And if you've been tuning into the Smart Property Investment Show for quite some time, we're in an interesting market at the moment. There's a lot of Aussies who have been investing for some time have had accelerated growth over this period of the last 12 months or so with heaps of equity in their portfolios, which is great for property investors. And equity can be leveraged over time through refinancing. But I think it's pretty clear that some of the challenges that we all face right now in terms of lenders is it's hard to get a home loan put through. It takes a long time. And obviously, and if you've had this experience, it's quite an onerous process as well. And often you might not want to go down that pathway. So there is alternatives emerging to refinancing. And I want to get into that today. And I've asked someone in the studio who's behind a pretty interesting product that I've only just really become familiar with, that I just wanted to do one of the stress tests and maybe challenge your thinking around whether or not you do need to refinance. You might still be able to get the same outcomes through different ways to access finance. We're going to get into that. But before we do, for all those first-time property investors, of which there is many on the Smart Property Investment Show, it's quite nice to be part of the journey for many people as they start thinking about property investing, and they binge the Smart Property Investment Show for a year or so, and they finally get into the market. But for all those first-time and new property investors tuning in, we have our first ever secret sauce buyer's guide to getting started on your property investing journey. It's powered by our partner, Bluestone Home Loans. We put a lot of time and effort into creating this toolkit. You'll need to get it underway and fast track your finance to get started on your first purchase with one of Australia's leading non-bank lenders. All you got to do is just jump on the homepage at smartpropertyinvestment.com.au, register your details, and you learn how to buy into 2022. This is for those first-time investors or new to property investors. Go and check it out. It's a really good guide. We've done all the hard work for you. Read that and you're going to be well on your way. But joining me in the studio today, he's the CEO of Futurerent, Godfrey Dinh. Godfrey, how you going?
Thanks so much, Phil. Really good to be here.
Yeah, great, mate. I've checked you out online and I've had a little bit of a nose around. I've got a pretty good understanding of the application of your particular solution. I guess you call it a solution. What is it? A finance product? Is it a solution? Is it an alternative way to operate in property without having to refinance?
Yeah, well, really good question. Yeah, we're a loan-free financing solution. So we're a bit different in that we don't lend money. We're just giving people their rent in advance.
That's pretty cool. So you front people's rent, so they get it in their pocket at the start of the year, and then what they pay down that loan over the course of a 12-month period or 24-month period. How does it all work?
Yeah. So Futurerent gives property investors access to up to $100,000 worth of their rental income in advance, right? And then they can pay it back over up to 3 years. So most commonly what we're doing is we're giving someone, say, a year's worth of rent up front, and they're paying that back over 3 years from about a third of the rental income. So that way they're still getting 2/3 of the rental income. So they're still getting the majority of the rent, right? So simple example, say someone's got a rent of $3,000 a month. They get 36 grand up front and they pay it back in, $1,000 per installment over 36 months. They're still getting $2,000 every month.
Okay. So that's interesting. So normally what you need to do is go through a process per my introduction and try and refinance. It means you've taken on a bigger debt, you've freed up some cash, and then you pay down that debt over time, often through, if you're a property investor, through the income you receive. So what's the benefits of your solution versus going down that pathway? No doubt speed is one of them, but what do people typically do with the money when they sort of get their rent in advance?
Yeah, so a couple of parts to that question. So in terms of the benefits and how we compare, I think that until now, property investors have really had no other alternative than to deal with the banks. So that means going through a whole refinancing process, which it includes income verification, valuations. Generally it's about a 2-3 month process at least if you've got all your ducks in a row. And that actually can be quite expensive as well. If you actually look at all of the costs associated with refinancing, when you look at break costs, you look at establishment fees, valuation fees, documentation, all of that. And, that generally on our numbers for most refinances adds up to about $2,000, right? Just before you even get out the gates. Then when you actually look at the cost of topping up your loan, even if you think you're paying like a pretty low interest rate, say 3% or whatever on your loan, the cost of that over the lifetime of your loan is quite significant. So, if you're taking, say, $25,000 out, that's probably going to cost you over $15,000 in interest, plus, a couple of grand worth of sort of friction costs. And then, where do you value your time? What does 3 months worth of work and all of that headache come out to, right? Whereas with Futurerent, what we charge is basically, we don't charge interest because it's not a loan. We basically charge 6%, but as a flat fee, right? So say, for instance, you access $100,000 worth of rent upfront. If it's a, rent property that's, say, rented for $2,000 a week, right? And you get $100,000 worth of rent upfront, and you choose a term of, say, 3 years, right? Then that's going to cost you $6,000 a year. So it's going to cost you, $18,000 over the life of the deal. But if it takes you longer because there's some vacancy, it doesn't cost you any more because we fix that cost. So yeah, if it takes you, 4 years to pay it back, that it's not going to cost you any more than that 6% a year, right? So I guess there's a couple of reasons as to why people use this. Definitely, as you mentioned, speed, simplicity, the fact that it's not a loan, it's not impacting your credit, right? And then, just like a more efficient sort of way to access the money. We figure that getting 50,000 should be easier than getting 500,000. But until now, that hasn't really been the case.
So the more I talk to you, the more questions I get. We can sort of break them down today. But so what's the maximum facility that you will provide to someone on what repayment terms up to 3 years? But what amount?
Yes, it's a maximum of $100,000 per property.
Okay.
Right. But the way we size it is you can get a year's worth of rent upfront for any reason, or you can get 2 years where you're using the money to buy another property.
So that's a pretty big number then. So what you're saying then, if you're getting an advance on your rent to buy another property, so rather than having to refinance to realise the equity you have in a current home to get a deposit buy a new home, you can get your rent fronted for 2 years and you can use that money to actually buy a new asset.
Yeah, absolutely. Absolutely.
That's pretty innovative. Is anyone else doing this sort of stuff? Is it?
No, we're the first people in the market to be doing this. And absolutely, we're helping people with, buying not just new investment properties, but we're helping people buy their homes as well. So, we've done a lot even with, for instance, like rent investors, people who just have an investment property, and helping them with the capital that they need to then suddenly, buy their first home. But a whole range of different people using the money for different things.
So I'm probably going to ask you all the questions that everyone's going to ask you, because that's the process of how most people query new financial products. And I want to get into that. Let's go to a break beforehand. Stay with us, back in a moment.
Looking for a blue chip Gold Coast investment property, or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show. I'm with Godfrey Dinh, CEO of Futurerent, talking about a new solution they have to, enable property investors to either buy more property or leverage their future rent for the purpose of renovating or for other purposes. But you said a really key thing that's sort of caught my attention. So you're not a loan. You're a finance facility of some sort. And this particular facility doesn't impact your serviceability in terms of in the eyes of the lender. Is that correct?
Well, it doesn't impact your credit in that it doesn't show up on your credit file.
Okay.
So, and because we're just dealing with your rental income, all we're really assessing is the investment property, right? And that rental income. And, we get everything we need from the property manager. It actually doesn't, many people think that, you've got to have a year's left on your lease or something. That's not the case. Your property can be vacant, can have a month on the lease, periodic, whatever it might be. But in terms of how the banks look at it, generally what we're finding is the banks are looking at your future rent repayments as like an expense, right? So say, for example, you get a year up front, you pay it back over 3 years. So that way you're not receiving, a third of your rental income every month. So they basically look at that like an expense, and they look at your remaining rental income after those future rent repayments.
Okay. And this is sort of, it's an interesting approach to it all. Do you secure it somehow? Like, do you take a caveat out on the property, or how do you know that you're going to get your money back, essentially?
Yeah. So we're entering into a type of lease with the owner of the property that entitles us to a fixed amount of rent from the property. So that's sort of the arrangement, right? It's a type of lease. We don't lodge a caveat in the ordinary course. We've got the ability to lodge a caveat, but we don't really lodge a caveat unless someone, for instance, sells the property and we want to get paid out from the sale proceeds or something like that. But yeah, it is really different. You make a good point in that it's not a loan. So people are using it because they want to work their rental income harder and get more out of their investment property.
Did you guys sort of fall into this buy now, pay later environment, or is there something different to that? How do you sort of position yourself within all that, which is the way in which the world's going? There's been a proliferation of this sort of stuff.
Yeah.
Haven't seen an application like this before, but is that the sort of genre that you're in?
Look, I think it's a little bit different in that buy now, pay later is really like offering like a financing solution at the point of sale for people who are trying to encourage a lot more, discretionary spending or, in many ways, often impulse spending. We are really, I guess, moving in the same trend that financial services is moving, where people are, starting to demand better, more personalized, customized, financial solutions for their needs, right? And it used to be in the old world that, you'd go to the bank for everything, for your Forex, for your brokerage, for your business lending, right? But now there are, individual companies that specialize in each of those areas, and they provide far better solutions for people. And I think it's the same thing with property investors, where, until now, property investors had as hard a time getting 50 grand as 500 grand, and they've had to go to the bank and they get stuck in the queue behind all the people who are looking to, buy a home to live in. They get, even when you're after just 50 grand, you get stuck in the queue behind everyone who's looking to buy another property, right? So you're going through this process and this solution that isn't actually built for your needs and isn't actually built for your purposes, right? Whereas, we think that property investment is really, it's like a business, right? And it's a capital intensive business. And as a property investor, to achieve your goals and to get to where you want to get to, you really need to be able to access that growth capital, so that you can get ahead and so that you can do what it is that you want to do, whether it's renovation or buying another property, or even just investing in, your own business or any other aspect of your life that can be difficult when you've got so much money tied up in your investment property. So we're really giving people like a better, more personalized, more customized and simpler solution to access that money.
And what sort of investors been most attracted to the product so far? You've only been at this for a little while from what I understand, but are they your more sophisticated investor with larger portfolios who just want to move quicker without the headaches of the banks, or is it more, newer property investors, or are you seeing a mixed bag?
Huge mix. So as I mentioned, we have everyone from, like I mentioned, to say that rent investor who's got one investment property, who's looking to buy their next or looking to buy their own home, right? All the way through to, more sophisticated property investors who have multiple investment properties, who are even using Futurerent on, their whole portfolio, right? And getting access to, in some cases, enough capital to buy a property without any debt, right? Where they're literally just buying more property from their future rental income, paying it off in 3 years, right? So that, definitely I think though the more active investor is probably like our sort of sweet spot. Average client is probably someone who's, in their late 40s, right? Has, maybe 2 investment properties, right? But's really looking to grow, right? And really looking to, often I think where Futurerent works really well is with those more active strategies. So people who are, for instance, buying a house on a decent sized block of land that they can put a granny flat out the back of, right? And then suddenly they're getting more rental income that they can actually access as well. And that can continue to grow and sort of turbocharge their strategy. So yeah, but a whole heap. I think the rental market has really shifted in the last sort of 18 months, which I'm sure you and your listeners are sort of seeing as well. And that's created a whole lot of opportunities because all of a sudden, like a lot of areas, the yield that you're looking at is pretty decent. And that also means the amount of capital that you can extract from those properties is pretty decent. And then as well, sometimes it's more immediately achievable, but often because the market sort of moved around a lot, to really get the most out of your investment property, often you actually do need to spend a bit more money on it. And if you do spend that money on it, then the yield that you get is really significantly increased. So for example, we've got a client who has a property up in the northern suburbs of Darwin, who it was rented for $500 a week, but that market's really done quite well recently. And to capitalize on the market and to get the tenants who are willing to pay a premium and all the rest of it, he did like a pretty cosmetic renovation on it, spent about 25 grand. So he got, sort of a year's worth of rent up front, did the reno, and then he managed to push the rent up to $800 a week, right? So it's an extra $300 a week he's getting, or 15 grand a year. So he's getting over a 60%, cash on cash return every year on that renovation spend. And obviously that's a big outcome. More commonly, we see someone who's, maybe spending, 20 grand on a property, but then still putting the rent up by $100 to $200 a week, right? But that's still a really good return in terms of a really good, return on investment for that reno. And then it often plays into the, what's the capital value? Can you get the thing then revalued? How does that play with your broader financing strategy?
Yeah, that makes sense. So I get that. And what you're pretty much saying is that the cost, the 6%, so for every $100, it's $6, or every $1,000, 60, whatever it is, it's essentially a free pass, right? If you can uplift your rent in that regard, you're covering the costs for the opportunity, or the opportunity cost in order to get that money up front. But you're getting the capital value uplift as well, where you can actually go through the refinancing process and extract that equity. Can you pay the facility back earlier, or do you sort of need to keep to the terms if it's 12 months or 24 months? How does that work?
Yeah, so you can pay it back at any time. The thing is, because the cost is fixed, like I mentioned, what that means is if it takes longer to pay back, it's the same cost, but equally if you pay it back sooner, it's the same cost. But to your point around where it makes sense to use Futurerent and what the cost is, where you say, look, the cost is 6%, and that's 6% of $100. I think the important thing to realize is that it's only really 6% of the rental income, right? So say on average, someone's getting a yield of say 5%, right, on their property. If it's costing them 6% on that 5%, that's costing them 0.3% of the property value each year, right? So if you get, say, CPI and you get 3% capital growth, that's 10 times that 0.3%, right? And what we're doing is we're unlocking that ability to make that next investment.
And you said property investment needs to be considered the business, and I agree with that. On that basis, then the fees to participate or to secure this facility would be tax deductible in that regards?
Well, yeah, effectively, our cost reduces the income you need to declare because you're receiving 6% less rental income. So effectively, it's 100% deductible in that way.
Super interesting. And, anyone that sort of goes into exploring any sort of finance product, you need to go in with a considered approach. What are the key questions you normally get from people using or investors using this particular product where they go, oh, I'm not sure about this, I'm not sure about this? What sort of misconceptions do you normally need to dispel on these things?
Yeah, I think like one of the key things or the key exercise that people generally go through is they've got to work out, how much rental income is enough for them to continue to meet their obligations and their expenses, right? Because, right now they've got $100 worth of rental income coming in. And if they get a year upfront payback over 3, they're only going to get 61% of that rental income on an ongoing basis. So it's really up to them to do the numbers and work out, well, is that enough? Am I going to be okay getting less rental income if I bring some of it forward, right? So it's, I think, really an exercise that's really the key exercise that people need to work through. And we leave that up to them. Mm-hmm. I think the banks have almost become, in a way, like kind of a bit paternalistic with people. And when you look at the contingencies that the banks apply where, even say the 3%, they increased it recently to the 3% buffer that they apply. That's double what most people are paying. People, and like, does that make sense in over 30 years? Maybe. Does it make sense over 3 years? It's crazy, right? We all know rates aren't going up that much in 3 years. So yeah, I think our clients, really appreciate the kind of latitude and the fact that we respect that, look, you're responsible people, you're investing for the sake of trying to better yourself in the future. So we're just giving you flexibility with your rental income so you can do it.
Yeah, and it is flexibility. And my recommendation would be just to run the numbers on this sort of stuff. You can, you create yourself a pretty simple spreadsheet to work out whether or not, with the reduction in the ongoing cash flow because you've got your rent up front, whether or not it's going to put you in a position where you can't meet the requirements around holding investment properties. The idea of an investment property, you want to try and hold it for as long as you can. Typically, it's when people find themselves unable to hold the properties when they need to sell it. And if that's sort of a bit too much for you don't really know how to do it, just go and speak to your accountant. They'll be able to help you out with this and run the different scenarios around using facilities like that. But I get the upside, right? Like it makes sense that upfront cash flow to better your asset or use that money for the purpose of creating wealth elsewhere makes a lot of sense. So we're going to another break. When we come back, I really want to understand the backstory of Futurerent. Back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant from the Smart Property Investment Show with Godfrey Dinh, CEO of Futurerent. Are you a property investor, Godfrey? How did all this happen? Or you're a finance guy? I guess this would be a fintech, financial technology business, doing things differently. How did you end up doing this?
Yeah, good question. So, background, I actually studied property economics at university, and I came out of that. I was actually, while I was still studying, I got a job at Investec in their sort of property investment structured finance area. And I was always really interested in different ways to, innovate in real estate. And when I was at university, I did my honours thesis in property derivatives, right? Just different ways of investing in real estate. And, I had my own experience, like as a, young property investor, even though I sort of had a good job and all the rest of it, I sort of, just managed to save enough money for the deposit, the stamp duty and the closing costs. And the first investment property I bought was a house in Ermington in the suburbs of Sydney. It was on about 900 something square metres of land, had an old sort of dilapidated tennis court at the back of it. And the block was big enough to subdivide. So I always sort of had in the back of my mind, awesome, this place, rent it out, get a decent little rent. And then at some point, do a little subdivision, carve off, that block of land at the back and, should make a decent little return. But even though I was in a good job and earning a good income, I didn't have enough money to do the subdivision works. Right? And, I just ended up constantly prioritizing other things over investing more into that property and, doing the work that needed to be done to realize any sort of gain. So I still, when I sold it, I ended up like sort of holding it for about 4 years, sold it, made a small gain because I wanted to pull the money out and buy something else. But it really wasn't enough to give me what I needed, right? So I made two mistakes there. I didn't hold it for long enough because I needed to extract the capital, right? And secondly, I didn't invest in the property more because there was nothing really that was available to me, right? And I looked around and I saw in the commercial world, which we dealt a bit with there in the commercial property world, often landlords get paid their rent quarterly, right? And then if you look at some of the sort of commercial asset classes, like for instance, say a service station where there's quite a bit of capex, often there you actually get paid annually, right? But as a residential landlord, it's illegal for you to ask for more than 2 weeks worth of rent up front, right? So, that was really something that stood out to me, and it made me think, wow, how is this not available? How is it that residential investors can't get their rent paid up front? Because, if I'd gotten my rent paid up front, A, I might not have needed to sell the property, and B, I would have had the money to do the subdivision and be able to get the property to where it needed to be.
So that's the catalyst then for thinking creatively around how you can empower property investors to move faster with more speed, rigor, flexibility. When was the first sort of facility you issued? How long have you been going for?
Yeah, so we got started actually, the first deal that we did was, I think it was April 2019.
Okay.
So we had, about a year before COVID hit. And that first year, you sort of start with a simple concept. We're going to give property investors their rent up front. But how you actually execute on that, how you structure it, what you worry about from a risk perspective, what you don't worry about, how the repayments should work, all of those sorts of things we sort of needed to really figure out in that first year. So that first year was really like a bit of a pilot for us. We could get out in the market, help some clients, talk to a lot of property investors and sort of, and build a bit of a portfolio. So that's sort of what we did in that kind of first year. And then I guess COVID happened. It had a pretty big impact on the rental market. And, similar to most, property management agencies or whatever, we saw about 17% of our book or tenants in our book put their hand up and say, look, we can't pay rent, or we want to pay reduced rent, or, we want to talk about negotiate something. And, that was that was a bit of a crazy period, more crazy for, I think, our clients, because really a lot of that rests on them. But what our clients really appreciated was the way that we'd structured things, because it's not a loan, you're not obligated to make repayments as such. We're paid back from a portion of the rent that comes. So basically the payments pause until the property is re-tenanted and the situation sorts itself out. So really all it meant for us was there was, a portion of our book that was delayed by a couple of months. And yeah, if anything, I think that was a really good thing for us, because very early on in our journey, we had a pretty big kind of event in the rental market, which sort of proved up the model and proved that, well, this really works and landlords actually really love it. And, we don't actually lose any money. So
there's a bit of a blessing in disguise to actually get that pressure placed on the business so early on, and that's birthing. No, really interesting, Godfrey. And I reckon there's heaps more sort of case studies around this we can drill down into the future. But yeah, thanks for introducing this product to our listeners. Like most people, you get frustrated dealing with banks. So, isolation sort of property on property is pretty good as well. But imagine once you get someone using it once, they probably use it multiple times. You've probably seen that already, I would imagine.
We do. We have clients who use it really well. We have clients who, now are basically using us for all of their sort of shorter term and investment capital needs, and they're just fixing their rates, getting really great low fixed rates, and then just growing their portfolio. Often, some really clever clients. So doing a lot of like dual income type of strategies. So, we had we got one of our favorite clients. He's a property investor down in the ACT, and he has, got probably 6 or 7 properties with us now. And he's just been growing his portfolio over time and doing some really, really clever deals. Like he did a deal with us earlier this year where he bought a property for about $730K in, I think it was Canberra in the ACT. And it was, 3-bedroom house on a 900 square meter block of land. And at the back, there's like a 1-bedroom semi-detached sort of unit, 60 square meter unit. And he managed to get in there, do a bit of a renovation using some of the money that we'd given him on another property. And then he managed to rent the unit at the back for about $400 a week and the house for $900 a week. So he's getting like $1,300 a week on a place that he bought for $730. He got it revalued for $950. And then, we would, because of the cap of 100,000, we're only able to give him 100,000, but still 100,000. He's pulling out 13% of the capital value of that asset, right? And he's getting like a 9% yield on cost on that, and took the money out to go and buy another property and just continue, repeating the incredible sort of investments that he continues to deliver. So,
and I think if you were to look at him as a case study, I reckon he's right across his numbers. He runs a really tight shop. He's a very active investor rather than a passive investor. And I reckon probably those that best capitalize on products like yours, you've got to be on the tools, in the game, working out how you can actually leverage this sort of stuff. Yeah, it's good, Godfrey. Well, let's keep in contact, mate. It's good to hear it's going well. And, if you've got someone that wants to come and have a yarn with us, I'd like to actually see it in real life in action with a property investor.
Yeah, wonderful. Well, really appreciate your time, Phil. Great to chat.
Yeah, that's Godfrey Dinh, CEO Futurerent. What's your web address, Godfrey?
Yeah, futurerent.com.au.
Okay, and people can just go there and click a button and go and talk to you guys if they want to do that sort of stuff.
Yeah, 100%.
Yeah. Right, cool. Go and check it out, futurerent.com.au. Hope you enjoyed it, everyone. As well as investor stories, I like to try and uncover different ways for people to approach property investing. As I've said, don't go in any sort of finance facility without being really clear exactly what it is, how it works, what the requirements are, what your responsibilities are. And if you need a second set of eyes on it, go and speak to your accountant. Get yourself a good savvy property accountant. They are out there who actually get property investing, particularly those who are property investors themselves. They should be able to help you on your way. Remember to check out smartpropertyinvestment.com.au, social media, Smart Property HQ. Go and check it out if that's how you like to get your info. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to secure finance to maximize your returns on your investment property? Finny can help. With access to over 70 lenders, Finny can find the right finance for your unique situation. So whether you're ready to refinance for a better rate, improve your cash flow, release equity to grow your portfolio, or are looking to find the right finance for your next purchase, we're here to help. Visit finny.com.au today to learn more.